My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people, my friends, I'm just trying to make a little money. My job is not just to entertain you, but to educate and teach you about how these crazy days work. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Turns out Nvidia's mortal after all. Even though it reported a great quarter last night, it wasn't able to deliver its key product fast enough to allow the company to do what it's done so many times before, blow away the earnings. Yeah, raise its forecast to unfathomable levels. Nvidia didn't define today's trading because it failed to dazzle in the way that so many money managers had come to expect. Didn't even seem to matter to the averages, though. Dow advancing 244 points, S&P basically flat, NASDAQ dipping just 0.23%. My response to all this, all I can say is, goodness gracious. With this quarter's results, the albatross of perfection is now gone, the millstone shredded. As much as I love Nvidia, I'm thrilled that we can finally return to a market where there are many important stocks representing many important trends instead of one stock that's captured the attention of legions of investors, many of whom have no idea what it does, let alone where it fits into the technological food chain. I stand by view that you should own the stock of Nvidia and not trade it. After all, I've spent days warning you that the buy-side expectations were too high, and the stock had run way too much going into the quarter. I told you the company needed to deliver a gargantuan beat and raise quarter in order to make it rally, something that seemed very unlikely, if not downright impossible. But I never backed away from my belief in the value, the ultimate value of the company. What I'm saying is that, in the end, Nvidia isn't a concept. It's not a cult. It's not a miracle. It's a company that designs really fast chips that allow for rapid calculations that help companies speed up the solving of problems while improving productivity. You can't ask Nvidia's Blackwell chip to cure cancer. Can't do that. It won't put a man on Mars. It certainly can't bring about world peace. Yet when you look at how this stock was trading in recent weeks, the market was basically asking CEO Jensen Huang to do all of these things and more. Instead, right now, it looks like it can expand customer gross margins. Important, but not earth-shaking, especially because the enterprise is the client, not you. You won't even see it. Now that this quarter's in the rearview mirror, my hope is that those who wagered on the stock, notice the word wagered as opposed to invested in the company, will finally move on. No more exacta box with AMD to place, please. We have to go back to a world where we try to value Nvidia like any other company. We have to put a reasonable price to earnings multiple, PE multiple on it, given its growth rate. Wall Street analysts are saying Nvidia can earn $5 per share in 2026, which I think is a reasonable time frame when you're evaluating a big growth stock. We have to figure out what it should be worth based on that dollar number. Given that Nvidia is growing much faster than the average company, it deserves to trade at a premium to the benchmark S&P 500, right? You with me? That currently sells for roughly 24 times this year's numbers. Since we're using the 2026 estimates from Nvidia, the results in a little more of a discount. So let's say 24 times $5 of future earnings per share. What does that give you? $120. It's just a few bucks above where it's currently trading. It's trading like the average stock. Now, I can easily argue that Nvidia deserves to trade at a premium to the average stock of the S&P since it grows much faster than the average stock, and it's a much better company. So let's give it twice the P to E, twice the price to earnings multiple of the S&P. That would put it at $240. Again, whoa, it's not the average company. That seems pretty high, though. So let's split the difference and say that it deserves to trade at 36 times the 2026 estimate. That takes us to 180, but more than $60 above where it's trading. But realistic. I'm going through this entire exercise of boredom because after this quarter, I'm hoping Nvidia becomes just another company. Maybe even a boring one. One that's valued based on earnings rather than intangibles. And this is how we value a typical high-quality growth stock, which it is. I just gave you the process behind where a stock trades. All stocks. Now, all stocks, including Nvidia. It is a tedious process, this valuing of a stock. But in the end, that's what Nvidia is. It's a stock. Doesn't matter how brilliant Jensen Huang might be. I call him Da Vinci, but it doesn't matter. He's the CEO of a public company, not a magician or an alchemist or an artist. Now, I'm thrilled that Nvidia brought a whole new set of enthusiasts into the stock market, but I'm bummed that so many of these people are more gamblers than investors. They only got in because the valuations went from $500 billion to $3 trillion in 18 months. Therefore, they desperately needed that progression to continue. They were unrealistic, and I sense they now go and be unrealistic, betting on games of sports or chance. DraftKings, here we come. You know what? As Thomas Paine mold, they were always sunshine soldiers. They were always summer patriots and soldiers. I am disappointed. I'm disappointed in these people because I want them to stay. But I sense from the action at the end of the day, they're gone. Summer soldiers. I think this situation makes room for something great, though. I want to turn it into, as we'll talk about later in the show, lemonade. Let's turn the lemons into lemonade. See, we can focus now on all the terrific companies that were lost in the Nvidia shuffle. For example, how about AMD, which also makes chips, including chips for that, while not quite as useful for artificial intelligence videos, are still basically in the same league. Plus, AMD makes chips for traditional computing and servers that compete against a hobbled Intel. AMD stock is actually very cheap on its 2026 earnings estimates versus stocks, the others in the S&P. Oh, and by the way, what happened to NVIDIA was actually good, not bad for AMD. They are a competitor, for heaven's sakes. How about a company like Apple, which is about to issue a new phone that will soon be offering the latest in artificial intelligence for the consumer? The stock's historically pricey, but historically, Apple didn't have a service revenue stream that's sticky and predictable and creates a whole new level of stable earnings. Plus, Apple will be using ChatGPT, which has cost OpenAI and Microsoft billions of dollars to build, yet these guys are getting it for free because Apple's such a huge, highly valued installed base. Hey, how about Amazon? Stock down 29% off its high, like 29 points, not percent, 29 points. Even as we've just seen some surprisingly strong numbers from a series of major retailers, Best Buy this very morning, Walmart and Target. The consumer's clearly doing fine as long as you give her good value. And that's Amazon's middle name. Plus, they've got the best beat on how to use AI to figure out your buying patterns and batch your orders for same-day delivery, something that only costs Costco and Walmart. They're the only ones that can possibly beat them when it comes to price, but not delivery. Maybe Walmart Plus and delivery. On a company like Salesforce, how about this? Salesforce, they reported last night, they know how to use a generative AI to create smart agents that can answer pedestrian questions. Very important because pedestrian questions are about 90% of what customer service reps need to handle. Agentforce, the new AI initiative, will allow for massive expansion of gross margins as bots are a lot cheaper than people. We'll learn more at the company's annual Dreamforce Festival in 3 weeks. Again, not a barn burner. But that's the point of artificial intelligence. AI doesn't burn barns. It simply imitates us, which can be pretty valuable if you run a business. That stock should have been up, not down today, because the use cases were so compelling. I don't know what happened. It was a mistake to me. So I say goodbye to the Nvidia watch parties. Let's go back to the days when Jensen Huang was seen as a brilliant engineer with a black leather jacket and lots of amazing ideas, not an otherworldly miracle worker. NVIDIA is not the hope for the future of mankind. It's a company that's very, very good at what it does. It's leading the AI revolution, which doesn't cure cancer or even the common cold, but does help businesses do things quicker and for less money than ever thought possible. Bottom line, NVIDIA is not sexy, not Legion, not Superman, just an excellent computer company led by a CEO who's one of the best at what he does. Just remember, though, even with NVIDIA, it's not personal. It's strictly business. Let's go to Sam in Pennsylvania, please. Sam.
Jim, listen, after listening to Nike's fourth quarter earnings call, I got to tell you, we got a bigger issue than just the issues that I'm talking about with the consumer. It's quality control. You see, I've been buying Nike my whole life. I'm a runner. I ran in college. What I've been noticing is that the shorts are just falling apart. And until they fix this issue, I think it's going to act as an overhang stock. So I need Nike to understand that the quality of the products matter to us consumers.
Wow. Okay, so I was talking to Mary Dillon at Foot Locker. Foot Locker had a good quarter. She still swears by Nike, swears by the Jordan, swears by all that. But I get the same feedback you do, which is why I've been emphasizing emphasizing Hoka. If New Balance were a public company, I've been emphasizing that. I agree that there are real big issues with Nike, bigger than we can ever handle in this 2-minute call. But they have to be resolved if that stock is going to go higher. All right, now that National NVIDIA Day is finally over, they know nothing! I think we all should remember that even with NVIDIA, it's not personal, it's strictly business. On Mad Money tonight, CrowdStrike reported its first quarter since the cyber glitch took down millions of computers worldwide, and I'm seeing where things stand with the CEO. Then some people are having a hard time picturing the applications of generative AI. I'm listing all these important use cases and how to invest in them. And Gap shares were halted earlier in a nutty thing after the company's second quarter results were accidentally released early. But the stock still finished the day higher. I'm hearing what Wall Street liked in the report when I sit down with the company's top brass, and I'm liking that company's stores. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.